Okay, today is Wednesday, September 16th. It's almost 8:30 in the evening, and I want to do a little bit of a trade review from the pre-market this morning. However, I'm going to do it a little bit lo-fi because I really am not up to messing with making separate videos and cutting them up and splicing them together, and it's takes a long time, and I haven't gotten a system down for that yet. I'd like to do this all the time for my benefit and anyone who cares to watch. But I did a pre-market this morning, and it's on the YouTube channel. Went out. I don't know if you came to it via Twitter or whatever. YouTube publishes it right to Twitter. So I'm going to play it from here, and then I'll stop it. But what I want to point out is, of course, what happened, and let's talk about that afterwards. So the audio quality may be a little bit poor because it's coming back through my microphone out of my speakers versus inline in the system. So here goes. I would not. I think the odds are low that we would break above this 81.75 high today in any significant manner. That would be premature, I think. Nevertheless, there's a lot of weak structure here. If you look at the profiles, so there could be some more retracement, maybe up to the 61.8 area. Well, maybe not quite that high, but above the 50% retracement. Let me throw a fib on here again so we have those levels on this chart. All right, I've actually drawn two Fibonacci lines here to find the 50 to 61.8 zone from two different perspectives. One is from the all-time high at let's see, what was that? 21.17. Oh, wait a minute, I'm not sure that's. I thought that was 26.25. Okay, I may be thinking the overnight, but at any rate, the most recent swing high, I think this is the all-time high here. Okay, so from the high to low here, this creates the blue 50 to 61.8 zone. Okay, which yesterday we got up to and couldn't quite get much further than the top of this balance area. We settled right on that 50% line. Found some resistance in this area. The other way I've done it is I've drawn it from the most recent downtrend, well, the liquidation break, basically where it started, which would be this down bar on August 18th. And drawing it from the high to the low, the bright green is the zone we get there. So we're actually right in the middle of that sweet spot. Now I actually favor this for kind of finding out where we are on today. I would see this as if we do get higher, we probably won't get much higher. If we do look above this 81.75 level, I think we're going to find some resistance there. There's low volume there, but as far as really getting much higher than where this is, it's hard for me to see that coming into the news that we're looking at tomorrow. But anything can happen at any time. So more importantly, I don't see us getting all the way up to 20.0350, but short covering rallies can be quite, the higher up we go, the more people are getting squeezed who got in on this move here. So it could be quite dramatic if we do get above these levels, these weekly levels, these weekly highs, 74.50, 78 quarter, 81.75. Actually, I have another line on there I need to take out. Okay, just had to clean up an extra reference line I had. All right, so significantly, we've broken through this 20 moving average. All right, so that's strength. We've got this rising trend line, which was respected all the way up and creating some compression. We've got the resistance at the top of this volume balance area, and we've got this basically the top of this trading range at 81.75 is the top resistance level. So we've got this triangle with the rising trend line. And another thing to keep in mind here, if we do get a little bit of a breakout today, which is possible. Okay, I'm going to pause that. Sorry, it was probably a little longer than I intended it to be, but again, if I was to slice and dice it, I could narrow it down exactly and cut things out. But Anyway, let's look at the charts here. Hope that refreshed your memory too of like what the market looked like before. And I just find this fascinating in so many ways. It's really cool to me. So um, let me clean this up here for a second. All right, so you can see that we broke out of the high of this balance area, right, which I used off the large volume here, which was the high from 2 weeks ago, actually, taking that reference off. So it had been repaired, as someone reminded me of today, so I thank them for that. And we went through the 3-week high of 81.75, which was the top of this, which was the high here, 3-week high, or monthly high as well, which put us, gave us a resistance level for this rising wedge. And let's pull this out a little bit. We went through, and how about this? This is amazing. We went to, well, it's saying, I was curious of what that red was behind there, but I already set my levels for today's previous high of the day. But it settled right on the 61.8. It just touched above it, came down, settled right there. I think that's just amazing. It's just amazing because you just can't hardly comprehend the fabric of the universe and how things are, just the harmony of things, And some people, I'm going to wax philosophical here about Fibonacci. Some people are like, oh, Fibonacci, yeah, it's a self-fulfilling prophecy. It's because people think it's there. That's why it works. I think that's very provincial minded. Let me just leave it at that. Okay. I don't think there was a conspiracy to put it at 61.8. It's sort of an invisible level when you're talking on this scale and this many players. So take that for what you will. I just think it's wonderful, that there is that kind of a harmony that we can use in trading to kind of help us, see the road. Okay, so that's all I want to say about that. But I just think that's pretty cool, and I hope you get as big a kick out of it as I do. And of course, it's fun to to kind of think of scenarios that could happen, and when they work out, it's just like, oh, well, I don't know if it's like this for you, but trading can be so, at least when I started, so such a wall of mystery behind what's happening and why, where's the market going and when and why, where will it stop, where will it break to, that kind of thing. And to begin to understand, or at least have some tools to wrap your head around it, it's just, it's wonderful. So anyway, if you don't use Fibonacci or you don't believe in it, to each their own, I think it's a great tool. And there's different ways of using it. Maybe somebody would tell me, oh, that's not the right way to do it from this high. You have to use the high to low. Well, I'm using this move. I think you can use. It's worked for me in many ways. Like from this move to here, this looks like it's probably a 78.6 pullback right inside of all this. Actually, let me try this. I don't even know for sure. Let's just do it just for kicks. All right, from here to here. All right, look right there, 78.6, where it looked, yeah, sure, did it go down here? Yeah, that's okay. But, it still fits a lot of other things, like the math is there. It's not always exact. So anyway, let's move on from that. Okay, so the next thing I want to go over is sort of the trading, kind of what happened in stages, and one of our plans for one of my plans anyway, for the beginning of the day, which was balance rules applying. The overnight was fairly neutral. It was net short, but it was fairly neutral. It stayed in this upper range here, which you can see in the video right here. And we're looking at balance rules, primarily the high of the day. But I broke apart each of the 3 distributions of yesterday on the chart to use each one sequentially as a balance area. Now we never got down to the lower ones, but we dealt with the upper half. And of course, I could use the whole of this, but I was focused primarily on the high of the day, with working in the value area as my first, especially on the lows, especially the go or no go. Look outside of balance and fail, or look outside of balance and continue downward type of thing. With the mention of M period, because M period had a significant amount of volume. Thank you to Matteo for pointing that out in his pre-market. But using that information, this was actually a possible, again, the high of the day being the top side as the breakout so close to the previous week's high. Anyway, let me play this, and then we'll look at what happened. Here is the profile split up. I'm treating each one of these little areas as a separate day. This was gold business taken care of first, and then starting with, well, you could argue starting with B period. The auction's the upside, but I'm using this open and dry from C period where the single prints are as the buying tail on this day. So I'm going to take each one of these value areas as a separate day if we get to the downside today. And I'm looking at this is the bottom of, or the top of this buying tail. I have a red line at M period. That's the afternoon pullback low. There was a lot of volume in M period. And actually, this is probably where it all is going to begin, really. But I will watch for any kind of a bounce off this little area here, which I'm going to keep marked off by having the value area separated. And then, of course, the high of the day is a go, no-go level. And then that's where we start finding out, are we going to take out the 2-week high? Are we going to get through, well, actually, this R3 is left over. Okay, that's where I changed the pivots, and I think I continue talking about what's the upside and looking at structure and things like that. So let's move into what happened today. Let me move this out of the way. Minimize it would be best. Okay, so pulling in the profiles, and I'm sorry, my little prologue to what the video, I pretty much said what I went on to say in the video, or what I had said previously in the video. All right, so I actually have split off today, earlier in the day during trading, I split this off as beginning of a new auction to the upside. That helps me in some ways. So this is today, A, B, C, this is today. And I have, let's see, Tuesday's profile, the upper distribution, I split it out. I can't remember why I did that. Let me put it back together. Oh, I think I did it so we could look at the M period. Yeah, that's why. All right, so the M period had a lot of volume, and it was the afternoon pullback low, which we often use as a reference. At least some of us do, and I think you should too. And anyway, we opened. It was a very low confidence open. A lot of times through the open, tested the 2-week high, I think initially, and failed. This would have been, I didn't take this. This would have been a no-brainer short. Your risk could have been to put a, but you know what? That high should not be there. That was repaired. Nevertheless, this area was respected. Whether it was because of this this level, I don't know. I guess I'm glad I marked it, but there was also that was beginning a low volume here. This was like a shelf of volume. Anyway, whatever reason it stopped there, who knows? Okay, maybe somebody's Cocker Spaniel barked and the buy orders didn't come in. All right, whatever. So we came back into the, now this value area is referencing this little split off part, so don't pay any attention to that. We came back into yesterday's range, and right there is a look above balance and a fail. So we came back into, because this is like a balance area, right? So we looked above the high and it didn't work, and it came back down. So it could have taken a short here, and as it made its way down through unchanged, came down, repaired the VPOC, repaired the TPOC, and stopped. Went back up. B period open. I can't remember how B period played out initially, but I can't remember. I don't remember if it went up or down first or whatnot, or maybe it just went to the open, came down, then went back up. I don't remember. Doesn't matter. Here's the point. So we were putting a little bit of focus on even this M period as being a balance area, and or at least it's really kind of the demarcation of where a lot of the volume is. It's a volume area. If I had a volume profile here, we could probably see it very well. At any rate, B came down, one tick below here, failed. And after that, the market kind of hesitated, it paused, which it often does before it finds direction. It balances, or they duke it out, whatever. And so that's what happened. So we stayed in here and we had an inside bar. When D opened up, now we had a higher low. We couldn't take out C low. Um, the race is on, right? So we come back up here. We take out the C high, take out the B high. You know, I can't remember. I think we made a poor high first, and then it, flitted around, then went. So it's hard to kind of keep all that stuff straight sometimes. But at any point, we had a poor high. Yeah, I remember we did have a poor high because I'm trying to think where I got long, but at any rate, it doesn't matter. The point is that we had a poor high and we broke this high, and the rest of the day to the upside. It was a pretty decent range day. And the thing is we looked, we had balance rules coming into the day, and the rules were satisfied. The plan was to trade a break out of balance if there was acceleration, and that's what happened. And there was a myriad of ways to get on board, and I'd love to go through them all, but it's, I don't want this video to be too long. It's probably gonna be 20 minutes anyway when I only want it to be 7. But this trade here, this was one beautiful trade, and I didn't take it, but I don't think, no, I didn't. I'm trying to think what I did. I did a lot today. I did a lot early on, and that was, wasn't the best thing, but it worked out great. At any rate, comes down here. This is the early morning high. This is now a support level, especially for me. I had this line here. I should have been a lot more astute on this, but it might have been hard to take because J was barreling down. It was open and drive down, but then when K opened it up, couldn't take out J. Boom, there you go. The rest of the day, one time framed up. It was probably hard to think of the long side. I know for me that I wasn't thinking of too much of a breakout above 81.75, but it went even higher. Of course, I was starting to want to see it repair these naked VPOC and TPOC. It did. I was out way earlier than that. I think it was a G period. I didn't get there, and I hung on longer than I should have, type of thing. Anyway, enough about that. That's not important. The point is that we had a plan, and if we kept that plan in our minds and traded it as it was setting up and believed in it, there were opportunities just smacking you in the face. And yeah, I'm guilty. I didn't trade perfectly, and you leave money on the table. You realize you could have done better. Once you're in, you don't get out when you should, or you get out too early. There's all the foibles of being a trader, right? But anyway, I just wanted to point that out, how this worked out today based on one of the scenarios, and I really would like to make a practice of doing this every day because it helps me with my own confidence and my own my own faith in my plan. That's the what I'm trying to say. So, all right, I think that's all I wanted to share.